Welcome to our session today. I am your instructor, CPA Aringo Frederick. So in our class today, it is a continuation of what we started earlier on. Because remember in our previous class, we had introduced the concept of target costing. So today, I want us to handle an illustration question which will open our mind wide for us to understand these concepts of target costing. And our illustration question is going to come from our past paper, Advanced Management Accounting. That should be a paper, a question which was tested in September 2015, question number 5A. By the time we are done with this question, you'll find that you should be able to handle any question when you are tested of target costing. So as usual, I'm going to share the question in our screen. We go through that question together, then we handle that question. So this is what I'm going to do. Let me share that question in our screen. So this is our question, September 15, question number 5A. And this is what we are told, that Delcom Limited is planning to introduce a new product. Market research information suggests that the product should sell 100,000 units over its life cycle at a price of 420. The company seeks to make a markup of 40% of product cost. Life cycle cost of the product will be as follows: design and development costs, marketing and distribution costs, manufacturing cost per unit. I'm given for direct material, direct labor, variable overhead, fixed production overheads totaling to how much? 200 shillings per unit. End of life cost, I'm given 4 million. Required. Number 1, the life cycle cost per unit. The product cost gap. Number 3, the management accountant estimates that if the company spends additional of 1 million on design, manufacturing cost per unit could be reduced. We are required to compute the maximum manufacturing cost per unit that will be tolerated if the company has to earn the required markup. And recall, the required markup was at the rate of 40%. So given such a question, my good students, what you need to do, the first thing is to do what? Is to smile, is to smile, is to smile. Because the examiner has given us almost everything there. So kindly take a screenshot of that question, then we proceed. Take a screenshot of that question, then we proceed. I believe you have the question now. I believe you have the question now. So, working it out, the first case, examiner wants us to determine the life cycle cost per unit. That was required number 1. Life cycle cost per unit. And this is very simple. Because we said for us to determine the life cycle cost per unit, what will we be required to have? We will be required to have our life cycle, total life cycle cost. We'll be required to have our total life cycle cost, total life cycle cost, we divide by the number of units. This is what will give us our life cycle cost. This is what will give us our life cycle cost per unit. So let us analyze the total life cycle cost of this product of ours. So, talk of life cycle costs. Life cycle cost statement. Life cycle cost statement. Life cycle cost statement, we should be having our life cycle cost statement. We start with what I was given, the costs. Among the costs given, believing that you have the question ready, we can see we had what? Design and development costs. Design and development costs. which in this case I was given a figure of how much, my good students? 10 million. We had marketing and distribution cost. Marketing and distribution cost. Marketing and distribution cost. I'm given a figure of how much? 5 million. Then we had manufacturing cost. Manufacturing cost. Manufacturing cost, I was given per unit, I was given 200,000, or rather 200 shillings per unit. And how many units were we producing? 100,000. So that should give us a figure of, that should give us, 20 million. In that case, I should be having 20 million, right? So we're going to talk of 20 million being our manufacturing cost. The other cost given here, I'm given end of life cost. End of life cost. End of life cost. End of life cost, I'm given a figure of how much? End of life cost, I'm given a figure of 4 million, right? We're given a figure of 4 million. So what will be our total cost? What will be our total cost? Our total cost here, we can clearly see that should be 15, 35, so I'm having 39 million, right? We do have 39 million being our total cost. Being our total cost. Total life cycle cost. The examiner wants us to determine life cycle cost per unit. So my life cycle cost per unit, we should be talking of our total cost, which is 39 million. We divide by the number of units given. You are given 100,000 units. So therefore, we should be talking of how much being our life cycle cost per unit? 390. 390. 390. And that is what you are required to do. That is what you are required. That is what you are required to do. So this was the first part. If you can clearly see here, if you can clearly see, probably a person will ask, Mwalimu, where are you getting the 200,000? The 200,000 is coming from here. Look at this case whereby I was given manufacturing cost per unit. See, I was given 200, right? Then talk of the 100,000 units. Also, probably a person will ask, Mwalimu, where are you getting the 100,000? Here is where we're having 100,000, where we are told market research information suggests that the product should sell 100,000 units over its life cycle at a price of 420 per unit. So that is where we are getting 200 and 100,000. So we have 390. And that is so the examiner wanted us to do. Life cycle cost per unit, we have determined it to be 390 shillings. Then number 2, we are asked to determine what? The product cost gap. Product cost gap. Product cost gap. And already we had looked at this. Product cost gap we mentioned. For us to determine that, we'll always be talking of our estimated cost, right? Minus our target cost. This should give us what? Our cost gap. Cost gap will always be talking of our estimated cost minus what? Minus the target cost, because I'm just looking at that difference, right? And maybe just to remind you, we said to determine our target cost, we'll always be talking about our selling price per unit. This is our target cost. Target cost. To determine our target cost, we will be talking about our selling price per unit minus what? Our target profit. That should give us our target cost. That should give us our target cost. And this is what we did. This is what we did. This is what we did. So we are required to determine our target cost, or rather our product cost gap. Let us start analyzing our variables. Estimated cost. Estimated cost. Estimated cost. We have estimated cost, right? We have estimated cost. Estimated cost, we have a figure of how much. We've determined our estimated cost to be 390. Selling price, for us to determine our target cost, selling price, I was given a figure of how much? 420. Target profit, my good students, target profit, I was given what percentage? 40%. This is markup. I was given a markup of 40%. I was given a markup of 40%. I was given a markup of 40%. Now it's upon us to work out our target cost, because I have estimated cost, yes, but you don't have the target cost. And we've seen for us to determine the target cost, ideally I'll be talking of my selling price minus our target profit. The target profit, I was given a markup of 40%. And recall, when we started, I mentioned it clearly that for us to handle this concept of target costing, we should be very good in what? The aspect of profit ratios. Amongst them, we mentioned profit markup, talk of profit margin, right? So that is what we mentioned. That is what we mentioned. So, target profit, I'm given, and in regard to our target profit, is 40% markup. This ideally markup of 40%, this is the same as 40 of 100, which will translate 2 over 5, right? That is 2 over 5. So I'm having our markup. Yeah? We have our markup of 2 over, we have a markup of 2 over 5. You have a markup of 2 over 5. And remember, we weren't given our cost of sales. So therefore, what we need to do is to convert markup to what? Markup to margin. And converting markup to margin, I clearly mentioned this one, that we will be adding our numerator to our denominator. So if markup is 2 over 5, it means that my margin will be 2, 5 plus 2, to give us 2 over 7. To give us a 2 over 7. That is markup to margin. So having that case, therefore, my good students, I know very well that my profit, therefore, I should be talking of 2 over 7 times our sales. In this case, you had our selling price, 420. So I'm having 420. To give us how much? 2 over 7 times 420, that should give us 120. This will be our profit. That should be our profit. That should be our profit. As simple as that. That should be our profit. So the moment you do our profit confidently, I can come and determine my target cost. Therefore, my target cost will be estimated cost, which is 390. Minus profit, which in this case we determine a profit of how much? 100, or rather a profit total for target cost 390. We are looking at first of all our target cost here. Selling price minus our target profit. Target cost. Selling price minus our target profit. Selling price, we have 420. Right? Target profit, we have 120. So that should give us how much? 300, right? So my target cost, I should be talking of how much? 300. As simple as that. As simple as that. So the moment you have a target cost of 300, can we then determine our cost gap? Therefore, my cost gap will be, my cost gap, I should be talking of my estimated cost, which is 390. we less our target cost, which is 300. So therefore, my cost gap, I should be talking of what? 90. We should be talking of 90. And that is what the examiner wanted us to determine. And that is what the examiner wanted us to determine in that question. That is what the examiner wanted us to determine in that question. As simple as that, my good students. As simple as that. Now, after we've determined that one, what was the part 3 of the question? What was the part 3 of the question? What was the part 3 of the question? Let me share it here. Part 3 of the question you asked, the management accountant estimates that if the company spends additional 1 million on design, manufacturing cost per unit could be reduced. Compute the maximum manufacturing cost. And you can clearly see initial manufacturing cost was how much? 200, right? Compute the maximum manufacturing cost per unit that will be tolerated if the company was to earn the required markup. If the company was to earn the required markup. So I need my profit. So we need to, the part here, question is, part 3 of the question, the maximum manufacturing cost, the maximum manufacturing cost per unit that could be tolerated if design cost is increased by 1 million. If the design cost is increased by 1 million, and still maintain our profit that we had. Our profit markup, we had 40%. So the maximum manufacturing cost per unit that could be tolerated if design cost is increased by 1 million, and still maintain our profit markup, and still maintain our profit markup. So in this case, what am I not given? The examiner is asking us to determine the manufacturing cost per unit. So therefore, what should we have? To maintain my profit, which you know very well that our profit, we normally talk of our total revenue minus total cost, or my profit CMQ minus fixed cost, where our CM is selling price minus variable cost per unit. So we need to determine this. We need to determine that one. We need to determine that one. We need to determine that one. So how are we going to handle that? How are we going to handle that? How are we going to handle that? So this is what we should have. This is what we should have. My profit. So first of all, let us analyze our total cost. My total cost here, believing that one is very visible. So my total cost here, we should be talking of our total cost. We have all these costs, right? We have marketing and distribution. We have marketing and distribution, 5 million, right? We had end of life cost, I'm having 4 million. Design and development. Design and development, we are told that we should increase, or rather our aim is to increase what? 1 million on design and development. So therefore my cost for design, I should be having the initial 10 million. We add 1 million to give us what? 11 million. So clearly this fixed cost, I should be talking of a figure of, that should give us 20 million, right? That should give us our 20 million. So term this as what? As our fixed costs. Because our main aim is to determine the manufacturing cost per unit, which initially was 200. Then, after we do have that case, profit, my good students, already we have our profit. Because our profit, for us to maintain that markup of 40%, we saw very well that our profit was 120 per unit. And how many units are we talking about here? We are talking of 100,000 to give us a profit of 12 million, right? To give us a profit of 12 million, to give us a profit of 12 million, to give us a profit of 12 million. Profit, CMQ minus F. Q, we have 100,000. Selling price, we have 420. So, what don't we have? We don't have our variable cost. And that is what you're terming it here as manufacturing cost per unit. That is what you're terming it there as manufacturing cost per unit. So clearly we can determine that. So my profit, take this formula, CMQ minus fixed cost. My profit, yes, is 12 million. Right? Selling price is 420. Variable cost, I don't have. Our units is 100,000. And our fixed cost, we have 20 million here. We have 20 million at that point. 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 So, just a moment. We have 20 million at that point. We have 20 million at that point. We have 20 million at that point. So, I need to determine my V. I need to determine my V. So, therefore, V. How will you determine our V? This is as if I'll be talking of, in this case, we are talking of, if we bring 20 to this other side, we should be talking of, or rather we can talk of, that should be 12 million, right? Which is equal to 42 million. Or let's just work it out simple so that we should be very quick. So I should be talking of 20 million. If it crosses on the other side, you should be having positive, right? So you're talking of 32 million. So you're talking of 32 million, right? Which is equal to 420,000. That is 42 million. This is 42 million for 20 by 100,000, right? To give us 42 million minus 100,000 V. In this case, we've taken it to be V, right? So what will be my V? My V, I can clearly see I'm having 100,000 V, talk of 42 million minus 32 million to give us V to be, so therefore 100,000 V is equal to 10 million. So about V. V, therefore, I should be talking of 100, right? Because you are talking of 10 million divided by 100 divided by 100. So V, I should be having what? 100. V, I should be having 100. So therefore, as we can clearly see, if we increase our design and development cost by 1 million, I can clearly see that my variable cost or manufacturing cost will reduce to 1 million. Initially, it was 200. Right now, it's going to be reduced to what? 100. So therefore, you can clearly see it has reduced our manufacturing cost. And ideally, this is what you are required to do in this question. This is what you are required to do in this question. So this will mark the end of this question, and kindly try more of these questions. So to this juncture, Thank you so much, and let us meet in the next session. Thank you so much.